well, the tax arrangements for trusts will soon be changed. Joining us to talk about this is Nick Dekker. He's a certified financial planner at Ultima Financial Planners. Morning to you, Nick. Before we get into this, I mean, tax is something that we have to talk about, although we don't always want to. But one of the devices that people use to manage their affairs is the use of a trust. So what trusts are we talking about here, firstly?
I think it's mainly about all trusts, but the thing is, what SARS is actually looking at is the misuse of trusts, because as you rightly said, in many instances we get with people who deal with trusts in a way that's actually an extension of themselves, and that's the misuse. Where you have a trust where it's structured to arrange the affairs of certain assets on behalf of beneficiaries. That's what you're actually talking about. So special trusts or testamentary trust, those ones are not the real issue, but it's the inter vivos trust which SARS are really looking at.
So the testamentary trust, that's where you set aside a trust in case of death that will look after minor children.
Yes,
that kind of trust.
Exactly.
That's not an issue here.
Those are not the issue here.
What was the Latin term you used there a moment ago?
Vivos. Inter vivos is a living trust.
Yeah. You know that.
No, of course. Yeah.
Inter vivos is a living trust, where the other one is a testamentary trust.
Right.
And so the problem is where the actual estate planner is still alive, and he wants to, in a way, distance himself from the assets. We know for estate duty purposes, income tax purposes, and so on. So the plan is to divide the tax so that all the tax doesn't come down to one individual, but rather to split it down to a family, because it makes sense. But SARS doesn't really like that, and internationally it's been frowned upon as well.
So is that the big change that has happened, and who's going to be impacted by this?
It's not a real change. Just to make one thing clear here, it's not the tax law that has changed. The tax law and the tax rates still remain the same. What SARS is actually doing here is the way in which they capture the information. They are refining it so that they've got more accurate account of all the income that is collected by the trust and also distributed, because they want to know who are really the real beneficiaries of the trust.
So in the end, it's about making sure that you pay what's owing, whether you've put money in this place or that place.
That's correct. That's correct.
How many people does this affect? And if people are involved in trust, what should they do now?
I think it's not the. Let's first start off with who is affected.
Yeah.
The affected persons are, first of all, the trustees, because they are responsible people. They have a fiduciary duty to manage the affairs on behalf of the beneficiaries. So the owners come down to the trustees. But then it may be that a trustee may appoint a tax practitioner, for instance, to submit and to take account of the accounts and the auditing of the income and so of the trust.
So when is this process effective from? By when should everybody be capturing the information in the same way?
So this is quite interesting. The SARS notice was released on the 23rd of September, but the effective date of change was the 3rd of October. So effectively, SARS gave 2 weeks notice to anyone involved, to these affected persons, trustees and so on, to get the acts in line. So those who were already in the process of submitting the data, who maybe saved it on the e-file, on the old system, they had the opportunity until the 3rd of October to physically submit. If they failed to submit and only saved the data on the SARS website, the information will still be there, but then they have to manually transfer to the new system. So they have to either print the physical document or keep it on 2 separate screens and read from the one screen and capture onto the new system.
Sounds as if they might have thought a bit more carefully about how to do this.
Exactly.
Yeah. Generally, you deal with SARS. How are they? My encounters with them, you don't always like the fact that you have to pay a bit more in, but they have been very efficient in the way they deal with you.
Yes, no, they definitely have. I know some of the administration. There are 2 systems here, I think. The one is where there's electronic systems that drives the calculations and so on. But once you get past that border, I think that portion is quite effective. But once you cross that bridge when you have to deal with persons, I think that's where the real difficulty comes in. We also deal with with estates, and sometimes I cannot tell you how frustrating it is to go sit in a SARS office to get in line. It really seems to me that there's no real system in place.
What's the problem?
Everything.
Let's start with one.
I had to go to SARS a few weeks ago. It was with the client's tax directive. And first of all, I arrived there at the time where they said the doors open. Then the doors were already open for half an hour or so, but the queue was very long. But there was no queue. I just had to go sit in a seat. They didn't even have numbers to tell me where about am I in this whole system. And then it was a roundabout ziggity-zag thing to get certain people, because if you have SARS tax directives, you have to go to a certain. If you're a tax practitioner, you have to go to another department. It was quite frustrating for me.
Sounds unnecessarily inefficient.
Absolutely. It was not a pleasure.
Well, thanks to Nick Dekker. He is a certified financial planner at Ultima Financial Planners. If you're involved with a trust, you need to do your homework and find out what has changed in the taxation arrangement.